The fair value gap, one of the most powerful trading strategies. When used correctly, it can yield significant profits, but many traders misunderstand it. In this video, we aim to provide a clear definition of FVG and learn together how to accurately identify it and make the best use of it. We will also teach you several great strategies for working with FVG. Definition of fair value gap. In a chart, an FVG forms when the price moves sharply in one direction, creating a gap between candlesticks. After this sudden movement, the price often tends to return to this gap, potentially filling or revisiting it. Traders can enter positions at this moment and profit from the price's retracement to the gap. How to draw an FVG. 1. Start by identifying a 3-candle sequence. 2. Locate a large candle between two smaller ones, ensuring that the high of the first candle doesn't overlap with the low of the third. 3. The space between the top of the first candle and the bottom of the third is the FVG. You can draw a rectangle on the chart to mark this area. This method works for bearish situations as well. 4. If there's no gap between the high of the first candle and the low of the third, an FVG hasn't formed, regardless of how large the second candle is. Identifying high probability FVGs. 1. Fresh FVG. To increase success probability, the FVG should be untested by the price. Once the price revisits the FVG, it loses some potential. An untested FVG is more reliable, and traders should consider entering as soon as the price revisits it for the first time. If the price returns and closes below the FVG, it's no longer valid. 2. Preference for larger FVGs. If there are multiple FVGs, larger ones take priority, as they indicate stronger imbalances between buyers and sellers and are more likely to act as strong support or resistance. 3. Position of FVG within the move. Among similar-sized FVGs, those located lower in the move are more likely to be effective. You can use charting tools like the Gann box on TradingView for precision. This way, lower or near-bottom FVGs are prioritized, while higher ones are disregarded. 4. Avoiding FVGs near key levels. If an FVG forms near a major support or resistance level, it's best to skip it, as the key level might cause a price reversal, invalidating the FVG. 5. FVG after break of structure. One of the most effective FVGs is one that forms after a break of structure, BOS. In this scenario, the price is more likely to revisit the gap and rebound from there. Optimal entry point for FVG. The best entry point for an FVG is its midpoint. To determine this point, use the Gann fan tool and draw from the bottom to the top of the FVG. The midpoint will be your entry. Then wait for the price to return to this point to enter the trade. Place the stop loss at the point where the FVG is invalidated. Advanced strategies for using FVG. 1. Inversion gap strategy. If an FVG has been broken, it can be reused as an inversion gap. In this scenario, the FVG acts as resistance. For example, if the FVG was bearish and after the revisit, the price shows signs of reversal, traders can enter a buy position. This strategy usually works only once. 2. FVG and Fibonacci combination. In this strategy, use the Fibonacci tool to find alignment with the 61.8% Fibonacci level, also known as the golden zone. After identifying existing FVGs, apply Fibonacci from the move's bottom to top and select the FVG closest to the 61.8% level. Then wait for the price to revisit this FVG and enter the trade when it does. 3. Multi-time frame FVG strategy. Start by identifying the general trend in higher time frames like the 4-hour using the EMA 200 for direction. If the price is above the EMA, focus on bullish FVGs. If it's below, look for bearish FVGs. Then, switch to smaller time frames like the 1 hour and wait for confirmation using indicators like the MACD. When all confirmations align, enter the trade, setting the stop loss at the FVG invalidation point and take profit at double the stop loss distance. These strategies can be highly beneficial for both beginners and advanced traders, provided you practice them thoroughly to master them. If you have any specific strategy or style in mind, let us know in the comments and we'll create a tutorial for you. Thank you for staying with Prime Risk this far.